So a bigger question is what the fallout is. I said this earlier. We just don't know who's going to end up here as a creditor and how broad this is. You're talking obviously about a lot of private investment that was made over time in this company at a valuation that got as high as $35 billion.
Do you have that list? I love that graphic.
You're also talking about, yeah, we do. You're also talking about customer accounts that are frozen, where it's just your money. There's a look at the press release announcing this bankruptcy.
That is Lehman. Remember, that was Lehman.
Yeah.
You couldn't get your money.
You're also talking just about a domino effect and what's connected to what. We don't know, Jim. We don't know. I'm not saying there is, but we don't know.
Okay, but the only reason I say it's not a domino effect is that this is a corner of the market that wasn't part of the market. Okay, it was in the same way that if you went to Caesars and you beat Caesars, okay? I mean, that's what it was. I'm not encouraging you to beat Caesars.
All right, but there was cross-collateralization right at FTX with this Alameda. There was clearly a lot going on there that nobody knew about. My point is we simply don't know.
But remember, if you were a client of JP Morgan and you said, listen, I've got $1 million worth of Ethereum and I want to put it with JP Morgan, they would say, we won't take that because we don't regard that as an asset.
So then go to FTX.
Right. Well, that's what I'm saying.
Okay,
I'm saying
now you're looking at.
I'm saying that
$1 million.
You couldn't get your money out.
Yeah.
To put it anywhere else. What does that say?
Well, you could have done Coinbase. You could have done Binance.
It explains why all the billionaires in the space are the intermediaries.
Yeah.
Right.
Look, it was really a nightmare to get your money out.
Well, it's even more of a nightmare
every
for those.
minute. TikTok,
and the Journal had a
TikTok.
story today. People who've lost a year's salary, young people, obviously, who are so disproportionately involved, I think, in crypto.
But how many warnings did they have? How many warnings? How many times did we sit here and say, listen, get the hell out of it? What did you have to do? I mean, honestly, go look at those joke coins that are being traded right now and ask yourself, why? Why are you in them? I mean, I think Powerball is worth more. I want to know why people are in those made-up coins.
Munger, rat poison, Buffett. I wouldn't buy all of it in the world for $25. It's all documented. It's all there.
Yeah, it is. That said, we put the coins up on our screens.
Well,
during the pandemic, it became a real area of focus for a lot of particularly younger people using the Robinhood platform.
Yes, it was. I mean, it is so tragic because we put up these.
Some of them are.
Please, let's stop putting up Salon. Okay, let's just stop putting it up. Let's just stop. We dignify it. Let's stop dignifying.
You think it's?
I think we dignify. No, look, I'm criticizing our network. I don't mean to. I love our network. But I'm just saying that it's time that we didn't usually have those. And I think that you might say, you know what, I want to be in that coin. That's a hot coin. Well, that's not acceptable to me. That's not an acceptable thing that I want to talk about as what I think is a responsible journalist. I do not want to.
It is price action, right?
Well, there's price action in timber, in lumber. There's price action in aluminum. But you get something. You have something. There's no there there.
There's no there there.
There isn't.
Gertrude Stein said that about Oakland.
It's alchemy.